A lot of people think that the only way to get their money to start really working hard for them is they need to go start a side hustle, business, pick up a second job, invest in real estate. That couldn't be further from the truth. You're just creating a second job for yourself there. In today's video, I'm going to show you if I had an extra $50,000, how I would put it to work hard for me, not just on a high yield savings account or treasury bills. And also the strategy complements your life, doesn't take away from it. Let me show you. Yo, what is going on, Premium Chasers? I hope you are having a God-blessed day. Today, every single person that comments down below is going to get my early retirement strategy guide, where I show you my 5 income streams that I'm going to use during my retirement years. If you want that ebook completely for free, no opt-in, just drop a comment down below in today's video and hit that like button and that subscribe button. Today, we're talking if we have $50,000, how do we get it to put it to work? And I'm not talking about just dumping it in a high-yield savings account, even though those are fantastic, right? But this is about taking it a little bit to the next level, but not to the point of investing in like real estate or starting a side hustle or doing some insanely risky bet. Now, I'm going to be the first one to tell you the strategy does involve risk. I'm not just some random guy on YouTube that's going to tell you, oh, it's risk-free wealth building. No, that's absolute insanity. Run the other way for somebody that tells you that. But I like this strategy because I control my risk. I control all the variables in this situation. And if I get burned, guess whose fault it is? This guy's right here. And the best part about this, no employees, no real expenses besides taxes, but we ain't avoiding those no matter what we start. And I get to do this in 50 to 60 minutes a week. And guess what? I actually enjoy it, and it complements my lifestyle. I think because you clicked on this video, you're going to really enjoy this as well. So if I had $50,000, how would I do this? I'm going to show you a couple different strategies here to bring this full circle. We see Palantir dropping like a rock today, right? Down nearly 10%. Now, this strategy really works well when a stock that you actually believe in, a stock that you actually love, is plummeting, right? And you're going to see why in a second. Now, I'm not advocating to invest in Palantir or anything. Do your own research. I do believe Palantir is ridiculously overvalued. But with that said, for the sake of this education example, it's setting up beautifully for what I want to share with you. Now, let's go high level, and then we're going to go dive into more of the technicals of how this actually all works. I just want you to get excited and see the possibilities of this. Most people, when they see a stock tank, they think it's an opportunity to build their wealth, right? They get to buy Palantir. Now it's dropped 10%. They go out there and they'll open up their Robinhood app, brokerage app, buy, let's say 100 shares. They dump 18 grand into it, or maybe 200 shares. They dump 40, 50 grand into it, and they just set, forget, and move on with their life. That's insanity. I did that for a decade until I learned what I'm about to tell you. We can actually get paid to maybe buy this stock at a better discounted price and get paid a premium income upfront cash that we can literally go use if we want to. Obviously, reinvesting is probably a smart idea, but I'm not going to tell you what to do with your money. How do we do this? Well, we do something called a cash secured put. A cash secured put essentially allows us to name our price and date that we'd be wanting to buy Palantir at. So we go to the options section. Don't click away. I know you hate options. I hate options too, but this is different. We are an options seller now, not an options buyer. So we go to sell, right? And then we're clicking put. All I'm saying here is I'm willing to buy 100 shares of Palantir. Now, next, I get to say the date. What date? Now, we can go 3 days away, 10 days away, 17, 24, 31. Listen, as an option seller, time is our best friend. I think for most beginners, even intermediates, even myself, I usually go 30 days, usually 30 days away. Sometimes I'll do shorter stuff, like maybe like 24 days, 21 days. But for the most part, I'm usually going 30 days out because that allows time to work in my favor. And that's all going to make sense here in just a moment for you. So I'm just going to go 31 days away to December 5th. Now what we're saying here is I'm willing to buy 100 shares of Palantir on December 5th. But I also get to name my price. Now, obviously, at the time of me recording this video, Palantir is trading at $187. Now, we can say, you know what? If it's at 185 on December 5th, I'll buy 100 shares. Sure. Like I love it at 187. Well, if you did that, right? Now, obviously results vary, not financial advice. You guys know these are just the premiums I'm seeing at my screen at the time of recording this video. We would collect $1,060. This is premium giving you, but let's talk about it. Let's put this whole trade together so you guys can see, right? And then we're gonna kind of come back to reality a little bit, all right? I just want you to see what the possibility is, right? And obviously you could see this premium's constantly changing. It just adjusted to 1,045, 1,020. We'll just say 1,040 for the sake of this example. I go to my cash secured put calculator. Let's zoom in here so y'all can see it. 1,040. You can get all my calculators free. Second link in the description of today's video. If you stay until the end of our Ark Options workshop, which is going to dive into all this stuff a lot more. You'll get my trade logs and all of my calculators as well, plus a value-packed strategy that you can implement for yourself here. So we're collecting 1,040. Now, your brokerage is going to lock up some of your capital for this, right? Because you're saying you're willing to buy 100 shares at 185. Well, if you broke and you ain't got the money, they ain't gonna let you just do that. You got your mind? If you were running Robinhood, would you do that? Absolutely not. So that's gonna lock up $18,500, right? 185 times 100. We got this, guys. 18,500. Now, if we wanted to do this with a larger, let's say larger portfolio, we could get away with, if we had 55,000, let's just say 55,000 we have, we could get away with getting 3 contracts. So I'm just going to put 3 here, right there. And that would give us $3,100 of premium. This premium is coming from the options buyers, right? There we go. Hit the juice button. I thought my daughter's broken again. But this is the trade, right? It's a 5.62% return on our collateral. I like to put my expiration date here. I got to fix this section, this trades area. Now, let's all come back to reality here, because this is probably exciting for you, but let's kind of talk about the risk, bring this all full circle, because if you just jump into this thing, it could blow up in your face, okay? First and foremost, this whole strategy hinders on one question only, fam, and that is, do you love this stock long term? Do you believe in it long term? Do you think it's going to hit all-time highs again? And you have to make that decision for yourself, not somebody, not some guy on YouTube or a teenager that sends in you signals on Discord. Listen, I know what you're doing in that Discord, right? I know what you're doing. Right? But jokes aside, right? The 5.62% premium is the premium divided by the collateral, obviously, and that gives us a 5.62. This is a risky play. So what can happen? How can this actually all work out for us? Well, let's say on December 5th at close, Palantir is trading still at 188. Maybe it's recovered. It's over 200. Anything above 185, your money, your $55,000, your $18,000 is returned back to you. It's given back to your account. Fantastic. Now, what do you have? You have the money, your money back, because you didn't have to buy the shares because it's not trading at close at that price that you said you were going to buy it for. Plus, you got the premium, baby. And guess what? For the following month, you can then go open up and sell another cash secured put on, Palantir in our educational example that we're talking about here today. Or you can go and do it on another company that's set up nicely. Okay. Now there are good, in my opinion, I like doing this on dividend paying stocks, because at the end of the day, you will have to buy your shares at some point. You just do. I have my live trade log here, and you guys can see most of the time I'm closing out my positions early, 53% of the time, but you could see 13% of the time I actually had to buy my shares. Now, if you want this full trade log, again, second link in the description, watch the workshop. It's going to educate you on all this stuff as well. So coming back over to the cash secured put calculator, right? Now, this play, right, if, let's say, at close on the 5th, Palantir is trading below 185. That's the big risk. Let's say it's trading at 180, 160, 150. You are not getting your money back. You are getting 100 shares or 300 shares of Palantir at $185. That's what you're going to be given. And that's not a bad thing, because then what we could do is something called covered calls, where we sell, we say we're willing to sell our 100 or 300 shares of Palantir at a certain price on a certain date, and you guessed it, collect more premium. But let's kind of talk about how this actually, how to set yourself up. So let's just cut the BS. We all don't want to get assigned most of the time. Let's just be real. But the reality is we will. But most of the time we just premium chase, and we want the premium. We want to get in and out, right, with our premium, right? Now, with that said, what you can do is open up these contracts, right? Now, these contracts, like if I look at the one, let's go down. Let's go to the 150s, okay? The 150 is a 0.08. Let's just say 0.10 for 10%. That basically means a 10% chance of assignment here at 150. Now, that is not the technical definition, right? It's not of Delta, but us as option sellers, that's the way we like to look at it. There's a 10% chance that you will be assigned at 150, that Palantir on December 5th will be trading at 150. Or the way I like to look at it is there's a 90% chance I'm walking away with the premium and I ain't got to buy no shares, right? But look at that. For in this case, you're only collecting $152, okay? So let's just put 152. Now, our collateral is going to be a lot less. We're locking up $15,000 on this position. $15,000. Okay? for about a 1% return. Is that good? Is that bad? You got to make that decision for yourself. You got to know, right? You got to figure that out for yourself. But if you had $50,000 and you're really only you like Palantir, at the end, they always think about this, guys. Always make sure you're investing in companies that you will get assigned. Like, just assume you will get assigned. So make sure that you actually would want to own this company long term, right? Because a lot of people I have found, for example, with Palantir, like, hey, it's crashing right now, but you believed in it yesterday, right? Had a great earnings, but now all of a sudden you don't believe it. What fundamentally changed in the company for you, right? And that's where your beliefs start to get tested. One of my favorite companies that I rode to the bottom, and I was sweating bullets, was Arista, right? When that was crashing down, and I continued on with it because I had this fundamental belief in this company. I knew what this company was doing. Nothing had fundamentally changed besides some bad press. And right, I was able to capitalize. But you can't capitalize, like, you have to just remember, you have to think for yourself when you're especially with this. Don't just buy like a stock because your favorite guy on YouTube or gal on YouTube tells you that it's their favorite stock, okay? Palantir, in my opinion, is extremely risky stock. Now, with that said, there are other opportunities that you can do this strategy on. Now, obviously, doing it on like Palantir is exciting, right? You getting these premiums are insanely juiced up, right? You're getting 4 or 5% a month on your money. Yes, but that comes with a higher risk, right? Obviously, Palantir has been on an absolute tear, right? Tech stocks on a tear. But with that said, us as option sellers, we're essentially selling insurance, so we have to be careful. In my opinion, at least in the environment that we're in right now, I like to be focusing on the boring stocks, like a Kimberly-Clark, right? That's come crashing down, right, after they purchased Kenvue for like $48 billion, because it's setting up really, really nicely. It pays a dividend, so if I do end up having to get assigned, I'm still at least collecting some covered call premiums monthly, plus getting some dividend. If you want to learn more about this, I have a 2-hour workshop. Click the second link in the description of today's video. You're going to be able to register for an upcoming session. Plus, at the end of that session, I'm not only going to teach you all this stuff in a lot more depth than I was able to do here in a short 10-minute YouTube video, I'm going to give you all of my trade logs and calculators completely for free. Guys, as always, sell options, collect premiums, repeat. I'll see y'all tomorrow.